For the staff of Auckland Airport, this time of year is triggering.
The rain has stopped, but the clean-up is only just getting started.
2 years ago, during the anniversary floods, the international terminal went under, even though the airport's research said it wouldn't.
And that report had told us that we were good till the 2040s. Guess what?
Yeah.
That wasn't the case.
CEO Carrie Hurihanganui is now heading a massive upgrade. New pipes, new transport hub, new terminal.
And we want to double exports, we want to be more productive, and we want to drive the summons. We have to invest.
Airlines are crying foul over the price hikes to pay for it, but the airport CEO is pushing back. She wants them regulated.
That is the least competitive domestic market in the world. And they have zero economic regulation.
Welcome to the NBR Podcast. I'm your host, Simon Shepherd. Carrie Hurihanganui knows the airline industry inside and out. After 21 years at Air New Zealand, she took over as Auckland Airport CEO in early 2022, just as this happened.
It's time to move again. And so today, in 5 steps, we move forward with our plan to reconnect New Zealand to the world.
New Zealand began reopening, and now the new Economic Growth Minister, Nicola Willis, wants the gates wide open.
I think driving tourism numbers higher is going to be very important.
Carrie Hurihanganui is the gatekeeper. So, how are things tracking?
Yeah, we've been really pleased when we look at, we're partway through the peak season. Obviously it goes through to the end of February into March. What we saw December was just over 1 million passengers, and actually that's been the largest single month internationally since January 2020.
So does that mean that we have recovered from COVID?
Well, that's internationally. So
Yeah.
you've got international and you've got domestic.
Internationally, what do you say?
Internationally, for peak season, we're actually doing pretty good. We're sitting at about 93% of pre-COVID capacity.
Yeah.
And those numbers are coming back. What we've seen is actually, if you look at that, we were 6% up on the same period last year, but airline capacity was down 1%. And so what we are seeing is airline capacity is still having constraints because of the global aircraft supply challenges out of Boeing and the like, but we're seeing much higher load factors. So for anybody that's travelled, they've probably felt that on the plane.
So the planes are full.
So at almost 86% load factor. That's for international, that's usually low 80s.
Right.
So that's a significant uptick. So the demand is there, people are wanting to travel, but the system is still washing through post-pandemic with aircraft shortages. We know obviously New Zealand has some of the engine challenges, etc. So it's a positive story, but we still are not yet back to that 2019 total numbers.
Total numbers. So that's international, but domestically it's flat, isn't it?
Yes, it is largely. And what you're seeing again, that capacity, and that's the planes that are flying, are sitting at 10 or 11% down on what they were in 2019.
Do you consider Auckland Airport to be an economic barometer? And if so, what would that barometer be saying to you?
It's a great question. I think certainly the airport's an economic kind of value engine when you look for New Zealand as a geographically isolated country, what kind of comes through the front door in regards to kind of $35 billion economic output plus another $26 billion in freight. As far as the barometer, though, if your question is saying, actually, how do we measure how things are going? Yes, I think you do see that. You see that in the forwards. We are engaging all the time with airlines globally, logistics providers and otherwise. The demand is there, and if you take some airlines offshore, foreign airlines are saying, you are on our list. We are fleet short. We are still waiting for some of our deliveries from Boeing. At the point we get those, we will absolutely be returning to New Zealand. So that's from a capacity perspective, and then you are seeing it in the higher load factors that people are travelling. In particular, if you look at Kiwis. So Kiwis last December was 4% up on what it was the same time last year. So that has recovered to over 100%. Kiwis are travelling.
Kiwis travelling domestically and internationally? Or
yes,
both?
Outbound. So we measure that as outbound travel.
Outbound,
Inbound travel is sitting at around that 90%, 92% on average, but it depends on the country.
all this is feeding into towards your half-year results. They're coming up at the end of February. Now, obviously, you can't talk about the details, but what's the vibe?
Well, the vibe in regards, we'd set the budget for the year knowing that we had kind of this mixed bag, that we had the positive growth that we're seeing, the interest in airlines, the return of airlines, and I'll use the example last northern summer, which is our winter period. Chinese capacity was at 117% of 2019 levels.
Right.
North America, 108% of 2019 levels. Other areas like Southeast Asia still need to get direct services back into that. So we kind of had overs and unders. So we knew that, but we also saw the headwinds of the economic environment in New Zealand and not being sure of whether Kiwis would take back to the skies, so to speak, as they have. So that's positive. But we also know we had this constrained domestic market. We have the 10 or 11% capacity shortfall, plus the cost of living crisis, et cetera. So we knew that we had some headwinds mixed with that, but generally feeling pretty good about it.
Right, okay. There's been a few hiccups recently in terms of things like baggage services, and there's an IT hiccup recently. What do they point to in terms of Auckland Airport? Is that part of just the problems with upgrading everything?
Yeah, I mean, we've got anywhere between the infrastructure program that we're investing in, assets that are 20, 30, in some instances 50 years old. And we talk about the analogy of kind of open heart surgery while the patient's awake a little bit, because it's a 24/7 operating environment. And so you do see, as you engage with systems that are that old, that you plan for them comprehensively, but you still do find some surprises as you go there.
Yeah.
We also interlink with third-party providers and suppliers that we rely on, and those things coming together. So we work very hard. We want to get through this infrastructure program with minimal to no disruption to our travellers.
So all this is obviously to do this massive upgrade, $6.6 billion. $5.7 billion of that is actually regulated, isn't it? Regulated.
Yes,
funding.
I think the update is 5.6. Yes.
5.6, okay. Yep. All right. And that's why, to pay for this, that the airport has to increase its charges to airlines, correct?
Correct. So the way that, so the aeronautical side of our business, which is the runways, the terminals, the baggage systems, come under the Commerce Commission's regulatory model, and therefore the pricing is interrogated as part of that. We fund the investment in those programs, and at the point they are in operation or commissioned is when airlines then get charged for those.
Right. So when the runway is upgraded or the baggage system's upgraded, that's when the new charge comes in. Correct.
So if you look currently, all of the cranes and infrastructure you're seeing around the precinct, that is being funded by our balance sheet and the shareholders. It will be when it opens, and we've got the new integrated jet terminal tagged for 2029. That will be the point for those particular assets the airlines will be charged. But as other things, we have improved the airfield, for example. As those come online, then yes, those are part of that pricing proposal that goes through to the Commerce Commission.
So let's talk about how this happens. So the Commerce Commission has done a draft report into what this is called the price setting event, number 4.
Yes.
Just for listeners who don't understand how these things work. So the Commerce Commission said at the time that basically the way that you're doing this, it would result in excess profits of between $193 and $226 million over 5 years to 2027. And the airlines have been saying to you, you're going too hard, too high, it's going to result in higher prices. Does the Commerce Commission draft finding back up what the airlines are saying?
No, I think what the Commerce Commission draft report actually shows is that the regulatory system and regime is working as it's intended to. So if you read the report from the Commerce Commission, they said, A, we think what you're building actually benchmarks well internationally. Your consultation was comprehensive and appears reasonable what you're building. So it was great to see that.
Yeah.
But what they did say is that you were right to take into account the impact of COVID over the last period of time. We don't agree with how you've taken that into account, and therefore, as a result, we think there's a potential for excess profits in that space. So that's been great in the draft report. We've engaged, we've submitted, as have other interested parties like airlines, and ultimately we will see what that comes out in the final report. We have already indicated we'll respond to that. So that's an indication that actually the regime is working as it's intended to. You
also indicated that if the Commerce Commission maintains that you may have excess profits, that you will perhaps look at reducing the new pricing regime. Is that right?
No, we've said we will reduce.
You will reduce. You have committed to that. Okay. I just wonder, in your argument, you say that you are bringing the pricing regime for airlines up to similar levels of other domestic and international airports. We've had a report out recently from Infrastructure Commission saying that Auckland has this economy of scale where things like public transport and other major bits of infrastructure are being used at a reduced rate because you have that economy of scale. Should that not also apply to Auckland Airport?
Yes, and if you look to a certain extent, it does. Airlines for the last decade or so have been paying about 50% or half of domestic jet landing fees that they'd be paying at comparable airports in New Zealand and Australia, probably as your most relevant comparative set. Now, that's because we've got a 60-year-old domestic terminal that's the depreciation and the model reflects that. Then as you invest and replace that, in terms of that and how that methodology and model that the Commerce Commission set is used, means that you will see a period of increased price, and then over time that will also reduce. So today a domestic jet landing fee is $11.75, and it's increasing $1.76 per year over this pricing period. That is still substantially lower than comparative airports in New Zealand in Australia. So that kind of economies of scale of what you're seeing is one element, but also then you actually have the assets themselves and the investment in them and the elements of how things like depreciation apply.
At the same time, you've got the public coming through the gates and they will see it reflected in their airfares to some degree. How do you think you are going with convincing the public that this is necessary, especially when it seems the domestic argument or the domestic opinion always seems to go around how expensive it is to fly in New Zealand?
Yeah, and I think you've got a couple of things to consider that. So as I'd said, if you look at, we have done some research with customers, and overwhelmingly 75% of those surveyed said absolutely the domestic terminal is past its use-by date. We're not enjoying it. We expect more of our gateway airport. So customers are very supportive of the change required. You then get into say, well, what's the implication on pricing? Landing fees are 4 to 6% of a ticket price. So at that view of it went from $7 to $11.75. So that $5 or the $1.76 per year over this pricing period increase, most customers have indicated say, well, for an extra $5, $6, $7, if actually there's more space for queuing and it's faster and it's more seamless and there's elements, we are supportive.
When the airport released those price hikes, airlines were, and still are, up in arms. Here's Air New Zealand CEO Greg Foran on the NBR Podcast in 2024.
If we don't agree with what needs to be spent, it's sort of too bad. I would say they have a very good monopoly over us. Difficult for us to land our planes anywhere else.
So do you think the airlines are being a bit cute about saying that, your price increase at the airport is too much?
Listen, all businesses want to manage their costs and want to protect their margins, and airlines are no different. So I get it, and I understand that basis. But when you step back and look in totality to say, well, actually, if infrastructure that is looking at 10, 20, 30 years in advance, that is creating the economic value of travel, trade, and tourism, that the safety and the compliance and the resilience elements are all catered for, that it is incredibly fair and reasonable. And when you look, what we are building will see us be on par and in line and competitive with other airports that operate in New Zealand and Australia. So I think it's important to have that context. And for airlines, the reality of having a debate around pricing, and if you look historically every 5 years...
Every 5 years, that's right.
It's a hot spot because that's when we set our pricing. Airlines face zero economic regulation. And domestic market in New Zealand, the national carrier has 86% market share. That is the least competitive domestic market in the world. And they have zero economic regulation. And over the last couple of years, you've seen airfares increase by up to 52%. So when we talk about the impact to travel, cumulatively, yes, you have airport charges and you have security charges and you have things. But I think the element actually, the Commerce Commission sets regulations in the best long-term interest of the consumers, not airlines and not airports. And so I think that view of kind of value for money economic regulation or market studies for New Zealand for airlines is something that I actually think needs to be looked at.
Right, okay. So, I mean, I sense that you have an argument that, you know, where do these airlines get off with this? Because they aren't regulated as you are. And you are saying that there is a case there for more regulation of airline pricing? You are?
Yeah, I think a market study of understanding that to say if you've got 86% market share in the least competitive domestic market in the world, that feels like you'd want to understand and interrogate that a little bit more. But there's an element also, though, because of the Commerce Commission regime, and that has been in place, the current regime since 2008, reviewed a couple of times, seemed to be fit for purpose.
What I'm trying to understand is that you're saying, okay, you're regulated with your prices, they're not regulated with their prices. Even if you didn't charge these increases, it's not going to reflect what the airline might charge.
Well, it's not guaranteed to, right? Because there is no regime or framework for which that to apply. And then if we step back, airlines are an incredibly important stakeholder. Air New Zealand and Auckland Airport's fortunes are tied. We need them to be successful. They need us to be successful. But tourism is only part of the picture, whereas our location and geographic isolation means that we rely on, as an open economy that relies on export, that trade is just important in that conversation. If New Zealand wants to double its exports in the next decade and it wants to create this future, we want to improve our productivity as a nation, we have to invest. There's something like, the New Zealand conversation right now is $200 billion of infrastructure deficit that New Zealand is facing. And we want to double exports, we want to be more productive, and we want to drive this. We have to invest, and we have to make the choices as a country to set us up for success.
If New Zealand is going to lift its productivity, it's going to need more capacity to export and import and all those kinds of things. Isn't the second runway crucial to that?
Well, certainly airports do what's called master planning, and so we're just in the throes of that now, and this year we'll be consulting with all parties. That takes us out to almost 2050. And then you overlay to say, well, we have a runway that's 60 years old. We know that climate change has had an impact. And so the master plan, as we look at the second runway, that's 10 to 15 metres above the current runway.
The current runway.
That would say, therefore, as you're thinking about the future, and we know that sea level rise and inundation, all of those things come into play. So the master plan is not only what we need, thinking about when we need it based on demand, and then how are we going to ensure that we're thinking about some of those other, in the last 60 years, those other elements that have come to bear.
And this is where we go back to the Auckland anniversary floods of 2023. That's the sound of a worker sloshing through water inside the international terminal. Massive disruption, even though the airport thought it was ready. So you raise a really important point of resilience. What is the airport doing to make sure that that doesn't repeat? I know you've got the master plan, but this is now. This could happen this year.
Correct. And you're right. I mean, what's been interesting in the learn out, besides the event that were so disruptive for passengers and the Auckland region, and then of course Cyclone Gabrielle hit New Zealand, and raised the question particularly around things like intensity of events. So well in advance of those events, we had studies done around sea inundation and rising sea levels, and that report had told us that we were good till the 2040s. Guess what?
Yeah.
That wasn't the case. And so we already, as part of our master planning and capital planning, knew that we had resilience and stormwater work in the pipeline, pardon the pun, but the reality of that coming faster because of the intensity of that rainfall.
Yeah.
So we largely have kind of brought forward a lot of that planning because we thought we had more time to do that, and we've got a 250,000 square metre airfield development at the moment that's underway that's due to open mid this year. And that has seen 3.5 kilometres of piping. Half of that is 1.8 metres in diameter. And very much will set us up.
These are massive works.
Massive works, and that will set us up in twofold. It addresses stormwater resilience. It creates the airfield for future use of growth, of managing the transition while we're building the integrated terminal. So it's got multi-facets in use, but we've brought that forward. So by mid this year, we will be set up to address some of the worst case climate scenarios as like the one that you mentioned a couple of years ago. Yeah. So all of our infrastructure program, when we are revisiting assets and upgrading them, those are all things that we're taking into consideration.
And this again goes back to, it's crucial for New Zealand Inc. as well, just to have the reliability of its major gateway.
Well, I think what you're seeing through, Cyclone Gabriel, it was demonstrated that actually access by air in many instances was the primary way to connect into that region. So ensuring that airports in New Zealand, and for us, Auckland Airport has resilience, forward capacity, headroom, all of those elements is incredibly important. And part of that decision-making that we weigh up alongside with what airlines want, what customers want, what compliance regulations require of us, resilience, climate. So all of those are taken into consideration.
All those things and the future growth of New Zealand. So can Auckland Airport deliver?
We are doing everything to do so. I mean, that is our focus, to deliver what we said, how we said we're going to do it, and when we said we're going to do it is our absolute focus. And thus far, we're tracking well. But we've got another 4 and a bit years of delivery to go.
And you have to take New Zealanders with you.
Correct.
The airport is a very complex business. It also makes money from real estate and car parking, but its main market is passengers and freight. So, before we go, we thought it might be valuable to provide some expert insight on how Auckland Airport is tracking.
Put it into context that we're still materially lower than pre-COVID levels of passengers.
Andy Bowley is Head of Research at Forsyth Barr. There is an indication this week that the new Economic Growth Minister, Nicola Willis, wants more tourists. Would that kind of announcement be good for something like Auckland International Airport?
It's good, but it depends on what's behind it.
Right.
So, currently our tourism industry is lagging the recovery in the rest of the world. An analysis that we did recently determined that of the 10 biggest source countries into New Zealand, in 8 of them we have lost share relative to pre-COVID. So, for example, our biggest source country, Australia, Australians no longer go to New Zealand as their favourite destination. They now go to Indonesia. They have increased the prevalence of departures to Japan, yet we've fallen as a share of their outbound tourism industry.
Auckland International Airport is going to be releasing its sort of half-year results at the end of February, and we don't know what's in that. But what were they predicting when they released their previous full-year results?
So they were providing guidance around passenger growth of around 4% this year. Now, 4% is pretty consistent with what this airport has done over the longer-term history, and that 4% is what they achieved during the first 6 months of this financial year. Now, that 4% is against a backdrop where seat capacity, which is a pretty good driver of passenger growth because passengers can't come here without seats, but seat capacity is flat.
So the airport's undertaking $6.6 billion upgrade, and a lot of that is going to be passed through with price increases to its users, like the airlines. Is that going to impact this sort of lack of capacity that you were talking about just then?
There are other issues that are higher up the scale in terms of their overall impact, such as border costs, such as the inflationary impact on the cost of travel in the first place, i.e. airfares are much higher. Now, airport charges are one piece of that, but they're a relatively small piece of that in terms of their overall impact. The issue that the airlines have with Auckland Airport in particular is that if you look forward 5 to 10 years based on the projections that they've provided, those charges will continue to go up at a rate of knots. And then you start to compare Auckland Airport against other airports in the region, and there's plenty of scenarios that would suggest that it would be expensive.
Right, okay. So as you're sitting now looking to the rest of this, to 2025, how would you describe the outlook for Auckland Airport?
I think it is good in the context of particularly the aeronautical side of the business. And by aeronautical, we mean this is the charging framework that they're provided by the regulatory system that the Commerce Commission oversees. It is a pretty favourable regulatory system, in so much that every dollar they invest, they get more than $1 back. So it's something they'd like to protect, and clearly they do a pretty good job of doing so. So from an aeronautical point of view, the earnings that they're going to generate from being an airport is quite attractive.
And that wraps up this episode of the NBR Podcast. Social media clips used are listed in the description. And thanks to content producer Jake Latham. For early access to new episodes, subscribe at nbr.co.nz. Up next, should New Zealand go for growth? I'm Simon Shepherd. We'll catch you then.